Hey, everybody. We are here today with Marty Rohlk, and he is a loan officer in Phoenix area who specializes, of course, in reverse mortgages. So thank you for being on with us today, Marty. How are you doing?
My pleasure. Doing well.
Good, good, good. I would love it if you wouldn't take if you wouldn't mind taking a minute and introducing yourself and just sharing with the audience what brought you to do reverse mortgages.
Hi, I'm Marty Rohlk. As you can tell by the gray, I'm a senior citizen myself, and reverse mortgages are a way to help seniors like me because we can't rely on pensions like our parents did and our grandparents. So this is an easy, simple, and logical way to help elderly people to basically age in place, to maintain their lifestyle the way that they have always lived it without having to, you know, eliminate all your assets and scale everything down. You can stay where you want to stay. And like I said, I mean, me being a senior now, I've looked into it for myself. And it may not be right for me right now, but it will be. And it's just something that I think would really help the elderly section of our population.
That's a good point. If we all could plan to have a reverse mortgage, we would probably handle our housing equity a little bit differently. If we knew, okay, a reverse mortgage was in the cards for us, we'd probably plan for that a little more, just like people plan the rest of their retirement assets. I hope we
Exactly.
can do that someday.
Mhm.
And that's kind of what you are on a mission to do. You'd like to educate people about this loan. Is that right?
Exactly. Uh, it's people just don't know about them. They know they have just tons of equity, and geez, how do I access that equity? Do I take out a HELOC? Well, if you take out a HELOC, you got to pay that thing back. With a reverse mortgage, you can structure it so you don't.
I
You
love
just
the HELOC conversation. So let's go into that a little bit. So
okay.
can you go into why a HELOC might not be a great fit for someone in their retirement years and why a reverse mortgage line of credit may be a better fit?
The main point is with a HELOC, you have to pay it back. You have to pay on a monthly basis. With a reverse, you don't.
It's
So you don't
huge.
have that monthly obligation. Yeah, I mean, a HELOC would be great. You can get $50,000 to do what you want, but then a month from now, you've got to start paying that $50,000 back. With a reverse mortgage, you don't. You're accessing your equity, and it doesn't have to be paid back until you are no longer in that house.
That's a really good point. And it's not just you're paying the 50,000 back. You're paying interest and principal.
Exactly.
And it's my
Interest.
understanding most HELOCs are open only for 10 years. And then you get to stop drawing anything and have to pay the full thing back over the next 20 years.
That is correct. And a lot of times that's a pretty big payment shock.
I'd imagine if you're like 67, you think, oh, I'll do a HELOC because it's cheap, easy, quick. Let's
Mm-hmm.
be frank. Then when you're 77, is your income typically going to be up higher to be able to afford that giant payment when it jumps?
Typically not. And that's when people start sweating.
And that's when they
And
call you, and what happens?
exactly. Well, we'll see what we can get you to qualify for.
Right? I've seen that a lot where people do the cheap, easy, quick fix with a HELOC, but they now used all their equity and now a reverse doesn't work for them.
Right. Exactly. Even though they are 10 years older, they they just don't qualify now because of that additional obligation.
All right.
But
Okay,
like
so
you said,
let's talk about
quick,
the
easy
reverse line.
fix. But,
Sorry
mhm.
about that. What? Say that again.
So I said, you think it's a quick, easy fix, and it is for a while, but you've got to pay the piper eventually.
All right. All right.
With a
So what are
reverse
some
mortgage,
of the other
what happens?
things? The
What's that?
reverse, what are some of the other things? The reverse mortgage line of credit. Why is that so much better?
It can grow. A lot of
Tell
people
us
don't
more about
realize
that.
as your house appreciates, that line of credit will continue to grow. And you don't have to access it. You can let it just sit there. And then when you need it, it's there for a rainy day. Say you want to, take the family on the dream vacation to Europe. Well, there you go. You've increased your equity or like $20,000 over the last 10 years. It's sitting there waiting to be used by you and create a, fantastic memory for the whole family.
Isn't that
You don't
beautiful?
have to pay it back.
And it's not just the 10 years. It's my understanding the reverse line of credit is open for as long as you need it to be until you draw it down to zero.
Exactly. Yep.
Such
So
a
much more flexibility.
right? I just absolutely can't understand. And it's exactly what you said. It's not that people are looking at the reverse line of credit and comparing it to the HELOC. It's simply they just don't even know about there is a reverse line of credit.
Exactly. They don't have to use it, but they can. It
And
just
if
gives them options.
right, and if they don't use it, what happens?
It just sits there. If when you finally, are no longer in the home, that's just less that has to be paid back.
Okay, so actually you touched on a really important topic. When does the reverse mortgage, if you don't have to pay it back every month, when do you have to pay this thing back?
When you no longer live in the home as your primary residence. So as
Love it.
long as you're alive and kicking and still comfortable in your house, there is no call on that note.
And what happens if you've got a husband and a wife, they're both borrowers, and one of them leaves the house, whether it's divorce or separation or death or a long-term care type situation?
Both parties would have to vacate the property before it would become due.
I love that. So
So
good.
again, it's just more flexibility. It's not tied to, what can I do for you now? It's what can I do for you later? And you've got that flexibility to, things happen in life all the time. We think we've got it all planned out and ready to go. Well, there are bumps in the road. What if you have to have, some short-term care? Do you have that money saved? Well, here's your fallback. There's your reverse line of credit. You can use that if you want to. If you want to, renovate to make the bathroom more functional for you as you age. I mean, I know, there's my countertops in my bathroom are really low. Eventually I'm going to have to raise those up, or else I'm going to have a really bad back. But
Uh,
there gives me the flexibility. I can use that reverse line of credit to get a couple of grand to do a little renovation in my bathroom to make it more comfortable for me and my spouse. It just gives you the flexibility.
I love that. And that's a really good point about the low countertops. So I'm currently working with a physical therapist, and the things that she tells me, I'm like, how did I not think of this? Because she'll ask me, well, okay, your back hurts, or I have a hip that kind of hurts. And she goes, okay, well, what are you doing during the day? When does it hurt the most? And I'd never thought about it. And there are times where I'm like, okay, I could move and I did. I moved my monitor to this side instead of this. I have another monitor here. So
Mhm.
that made a huge difference. People don't connect the dots like that, that the low countertop is what's causing your back pain. And then they
Right.
just live with it.
Yeah, that's just one example. I mean, there's all kinds of things. There's steps leading up to your threshold at the front door. I mean, as we get older, we don't do so well on steps anymore. So, make it a ramp. Well, how are you going to pay for that ramp? There's your reverse line of credit, just waiting to help you to make your life better.
Right? And you can draw on it like that rather than waiting until you realize, oh, I need a ramp because maybe somebody had a fall and they're
Mhm.
coming home from the acute care facility and now they need a ramp like right away. Well, this process takes some time, right?
Right.
So put it in place early is my motto. I mean, not everyone's going to be a fit for that, but gosh, the people who are,
Oh
what a
yeah.
blessing.
And there's so much equity in the senior class as far as, home equity available. Most people have, when they reach their golden ages, they usually do have a substantial amount of equity. And the beauty about the reverse line of credit is it keeps growing. Unlike a HELOC, we mentioned this before. I mean, you get a HELOC, it's got a limit right there. That's it, the cutoff. With the reverse line of credit, as your property appreciates, your reverse line of credit continues to grow.
Well, but that's the thing too. I love, even if your home doesn't appreciate, the line of credit continues to increase simply because of the interest rate growth.
Mhm.
Even if the property doesn't appreciate at all, that line of credit's going to continue going up, unless, of course, you drop it down to zero. Then there's
Right.
no growth. But and of course, one of the other features, it can't be frozen. My gosh.
I went through that in the crash of 07, 08. Used to do a lot of HELOCs, and all of a sudden, boom, had a $200,000 HELOC. They cut it back to 100, or they cut it back to 50.
Mm,
That's the risk you do with a HELOC. It's closed
right?
ended. You don't have that problem with a reverse line of credit.
But hey, keep sending us that payment or else.
Exactly. Yep.
Oh, there was a mentor of mine a long time ago. He told this story about in 2008, the happiest people on the block were the people who had reverse mortgage lines of credit because these were the people that could help their families when their adult children were losing their jobs, were losing their homes. They had a reverse line of credit to draw from, and it didn't incur a new payment for them to be able to help their family like that.
Exactly. Like I said, flexibility. I mean, you don't
Yes.
know what you're going to need money for. You don't know what the future holds. I mean, who does? I don't have a crystal ball. I mean, what I hope is kind of an idea of what my future will hold, but you'd never know. This way, you've got that flexibility.
I actually do have a crystal ball. But if you notice, you can't see into it. That's a realistic view into retirement future. You can't see into the crystal ball.
I like that. I like that a lot.
Yeah. All right. So what are some of the situations where you have helped someone and even just the education? What are some of the responses you get and then the education and the turnaround? I'd love to hear some of your experience with people who are looking into this or maybe that haven't thought of it.
Well, a lot of what we do is we educate. People don't know what a reverse mortgage, unfortunately, there's kind of a stigma attached to reverse mortgages from back in the day. They aren't the same beast that they were. There are much more checks and balances involved. And I what I love to do is educate people about what is their goal. That's the first thing that I ask somebody. Okay, what is your goal? What are you trying to do? And then just listen. Just listen to them. They say something like, I just want to get rid of my mortgage payment. Okay, great. What would you do with that extra money? And then that opens things up to other questions that they have. Just educate people to let them know that, yes, you've got a ton of equity in this property and you can leave it to your relatives when you pass, or you can enjoy it now and still leave them a good chunk of money. It's not like the reverse is going to eat up everything. There's a possibility it can, but it's highly unlikely
Well,
unless
and
you live to be
sometimes
like 120 years old.
yeah, and sometimes when we're talking about somebody in their 70s, 80s, 90s, we're talking about adult children who are 40s, 50s, sometimes 60s. Someone in my life right now is passing away. She has a diagnosis. She's got, anywhere between a month and 9 months to live. And her father has withheld an inheritance from her, from his dad, and she's never going to benefit from that.
Right.
And it's like, part of me thinks that situation is just so sad because he could have helped her enjoy. He could have probably helped her enjoy her life to the point where she wasn't so stressed and she could have maybe not had this condition.
I mean, and had an improved quality of life.
Together. Enjoy it together. Why be so stressed and then somebody passes and here's this big chunk, but maybe it's a little too late.
Mm-hmm. Yeah, exactly. I mean, you can have all the money in the world in the bank, but until you spend it on something you enjoy, what good is it?
Right. And what's more important than family?
Exactly. I mean, we all want to have the most comfortable retirement we can. And this reverse mortgage is just another tool to use in that goal of enjoying your twilight years.
Yes. Isn't that the
You've got
point?
the equity. It's not income. It's not taxed. So you don't have to worry about that. So, enjoy it while you can. You're not going to stiff your relatives. I mean, they will still have an inheritance, but they will also have the time, the memories that they had spent with you in this time when you're comfortable, you're happy. I mean, if you're not worrying about finances, you're naturally going to be happier.
That's a really good point. I have a past client who claims that she beat cancer because of the financial stress taken off of her. She could
There you
finally
go. See?
relax.
Yeah, exactly. It just seeps into all other parts of your life. It's just, one less thing on your plate. Because
So
we
what
all
are,
have plates that are heaped.
oh gosh. So what are some of the answers you hear when you ask somebody, okay, what's your goal? What are some of the things that people are telling you?
Well, I want to make sure that we are comfortable. That's like the most important thing. And we want to make sure that we can continue to live our current lifestyle. So we don't have to all of a sudden eat nothing but ramen, you
I
know?
mean, I like ramen a lot, but I get it.
Yeah, but there's only 3 flavors. So, what are you going to do? But that's what I get the most is, people say, well, I know I've got a lot of this equity here in this property, and I want to know what can I do with it? And they always say, well, I want to leave something to my kids. And I say, they'll probably get a good chunk of money. So you're not worrying, don't worry about, leaving them out on the curb or something like that. Ask them, do they want you to have a higher quality of life? And
Yeah.
if they've got any compassion whatsoever, they're going to say yes.
Well, and I like you use the word probably because on all of our projections, we'll see there is equity, 10, 20, 30 years out. There's still equity because that home is appreciating
Mhm.
typically at a faster rate than the mortgage balance is growing. So this is the typical growth. But the probably is important because in 2008, 2009,
Right.
when the crash happened, almost everybody was underwater, no matter what kind of mortgages they had, right? There were short
Mhm.
sales every which way. And
Exactly.
that it included reverse mortgages. So if you can time that you're not going to pass away during a down market, well, then of course you're going to leave something to your heirs. But,
Hmm.
the biggest question here is, okay, when are you going to die?
Yeah.
Nobody
I
knows
mean, nobody
that.
knows.
Nobody
You don't know
knows
that.
that.
I
But the
mean,
years when we have a market crash like that are so few and far between, the chances are so much lower in appreciating markets. That's not the
and,
same in some country or some states, some areas where there's no appreciation. But
well, like, because of what we learned in 07 and 08, there are now checks and balances in the market that have reduced that risk incredibly. I
tell
mean,
us more about that. That's a huge aspect.
well, back in the day, you could do what was called a negative AM loan, negative amortization, where you're required to make a smaller payment, but a larger amount was added to your mortgage every month. And before you know it, you were upside down. Same thing with, the appreciation in values. Everybody was, the market was great and everything. Nobody had to prove that they had any income whatsoever. We used to do with the company that I was at the time. They had a program called Fast and Easy. If you had good credit and you said you made good money, we believed you. Well, that kind of thing kind of bit people in the butt because they were spending way beyond their means because they just assumed everything is going to be fine. Well, all of a sudden people can't actually make their payments. So their house goes into foreclosure. A foreclosure house is going to lose value. You see, you've got a foreclosure right next door to you. That's going to affect the value of your home too, because you're now your comp, uh, your your comp, your I can't think of the word. Anyway,
Yeah, the
they
comparative
base
house
your
they're
value
basing
on
value
is
on.
going to be that neighbor's house, and that neighbor's house, because it's foreclosed, is going to be going down in value. So that's going to drag you right with it. And that's kind of what happened. It was a snowball effect in 07 and 08. I mean, so many foreclosures on the market, it just drove everybody's prices down. And nobody could, because all they did was qualify on paper. See, now we have to have, it's called a qualitative mortgage, where you've got to prove that you can qualify for this mortgage.
Well,
You've
and
got
that happened with reverse mortgages too. Prior to 2014, if you had enough equity and you had a pulse, well, let's get you into a reverse mortgage. But the caveat, of course, is you can tell the audience you have to pay certain expenses, right? If you have a reverse, it's not just no payments on your house at all. There's still a couple of expenses that are really important to talk
Got to
about.
pay your taxes. You've got to pay your insurance. You've got to maintain the property, because you're living there. I mean, we can set up with a reverse to compensate for the taxes and the insurance, set up a Lisa account. If you don't want to do it yourself, that can be done. But you've got that option. It's got to be paid. The taxes have to be paid. The insurance has to be paid, and the property has to be maintained.
Right, because they're still the owner. And I
Right.
think that's a big misconception. They think, oh, I don't have mortgage payment. I don't own my house. That's not true. It's
No,
a reverse mortgage, which means it's still a lien on title and you're still the owner. So you still have to pay taxes, insurance, HOA. And one of the other things you talked about earlier, you have to live in the home.
mm-hmm.
All right, Marty, I love talking to you. This is great, but we've got to wrap it up because our audience, it doesn't want to stay on for more than 20 to 30 minutes is what I'm
No
hearing
problem.
these days. All right. So let's go to, all right, this is the big one. If you could change one thing about the American retirement, what would it be?
Reduced healthcare costs for the elderly. That takes up a huge part of retiree income. Somehow subsidize that so it's affordable.
I think we should change that for everyone because even my age people, I talk to my friends and they're like, oh my God, I had a kid and now my health insurance is through the roof and health
Mm-hmm.
insurance and health costs. But when you're a senior on fixed income and you have these life events,
Right.
oh my gosh, that reverse mortgage line of credit
Mm-hmm.
is coming in to save the day. But gosh, wouldn't it be nice to not have to use the funds that way?
Exactly. Exactly. Spend it on quality of life and enjoying your retirement.
Yeah, absolutely. Well, if you go for president and you can make this, I will vote for you.
Okay. I'm not a politician.
I,
I don't
I
lie
know.
well.
Well, that's the problem. The people like you who have the good ideas and could make good things happen, you're not running for office.
Yeah, we just don't lie,
Yeah. But you know what? You're helping individuals in a gigantic
Exactly.
way. You may not change the American system, but you are changing the world of people. Their entire worlds change when you get them a reverse mortgage in a good way.
Exactly. If it works for them. Like I
If it
said,
works. Yeah.
we educate them,
Right.
make
Right.
sure
And
it fits. I'm not going to push a reverse mortgage on every single client. I'm going to analyze their situation, their goals, and make sure it works for them. It makes sense.
it's always so funny to me when someone who doesn't have enough equity realizes they can't get a reverse mortgage. And then someone with a ton of equity is too afraid to even look into the option. And it's like, you know who wants a reverse mortgage the most? The guy who's just short, who doesn't have enough equity.
Yep.
And if they could talk, one would be saying to the other, oh my gosh, you should be doing this. And the other would be saying, why? And they'd be explaining all of it for us.
Making the argument, both
Uh,
sides. Yep.
all right, Marty. Well, I really appreciate you being on with us today.
No
If
problem.
anyone wants, oh, let's talk about where you license. If anyone wants to get in contact with you to work with you.
I'm in Arizona and I'm within a stone's throw of Sun City, one of the biggest retirement communities in the country. So that's where my
Perfect.
clients are.
All right. And in the link in below this, there is a form where you can, it's a link where you can reach out to Marty, fill out his form. He will reach out to you if you want to work with Marty. He's an awesome guy. Um, and he'll meet you in person. That's one of the really cool things I love about Marty's business practice. You actually meet your clients in person. Not always, sometimes you can't, but
Yep.
a lot of the time you're able to. So I love that. All right, Marty, thank you so much. Thank you guys. We'll see you next time.
Thank you.